Relations. I'm Alex Ilchenko. I'm the first National Vice President East of the Ukrainian Canadian Congress. And the Ukrainian Canadian Congress, since COVID has started, has been having a series of seminars from various professionals, doctors, members of the cultural communities, and today we're dealing with issues for the business people in our community. And we have great fortune of having Chris Mazur, who is a partner and senior vice president at BDO Canada, and he is a licensed insolvency trustee, and he is going to talk about the budget that just passed and the various COVID programs that are in the budget that may be of assistance to business people. We had previously a seminar last spring when the first measures came out to assist businesses, and there's been so many changes. We felt that, especially after this budget and the extension of these programs, that this required another seminar for members of our community who are in business that can assist them. And the UCC has been encouraging its member organizations to put forward programs that could assist the community as a whole, that they're not just regional. If they have some sort of national scope, we'll broadcast them to the national audience, which is what we're doing today. And this was an initiative of Ukrainian Canadian Professional Business Association of Toronto, and the representative today is Uliana Tomyuk, and the Ukrainian Canadian Professional Business Federation National, whose representative is Kasyan Soltakevich, because there's nothing in this budget that is limited to Ontario or just local groups. If we can help the business community as a whole, we're happy to use the Ukrainian Canadian Congress's bandwidth and resources to do that. So without further ado, Mr. Christopher Mazur.
Great, thank you, Alex, and good afternoon, everyone, and thank you for your time today in attending my presentation. And Alex, thank you for inviting me to present to the Ukrainian Congress, the Ukrainian Canadian Professional Business Federation, and the Ukrainian Canadian Professional Business Association. Today I'm talking about, as Alex mentioned, COVID relief, federal budget, a guide for business, and basically I've addressed in my presentation the more salient and interesting measures that have been brought down. I, by all means, have not addressed every measure. We would be here for a long time, but again, what I deem to be the most important and interesting measures is what I'm going to talk about today. As Alex mentioned, I've been a long-standing partner with BDO Canada Limited. I manage our insolvency and restructuring practice in Burlington, Hamilton, Niagara. It also brings me into Toronto a fair bit pre-COVID, because I do a lot of work for the Schedule A banks, Schedule B banks, credit unions, and others. I'm a licensed insolvency trustee and a chartered insolvency restructuring professional. So note, I am not a tax practitioner. So if there are any detailed tax questions, I will certainly endeavor to get the answer for you from some of my tax folks in the firm. So, so to start off with the topic or the agenda, if I could get the next slide, here we go. So the first one more. Yeah, we're going to talk about the federal, thanks Eva, the federal budget overview. Secondly, an economic outlook. Thirdly, personal tax and business tax proposals. And lastly, the COVID-19 and government assistance, all addressed in the budget. Next slide, please. So starting with the federal budget overview, as everybody knows, Deputy Prime Minister and Minister of Finance, Chrystia Freeland, brought down, oh, why is that doing that? Excuse me for 1 second. Tabled the 2021 federal budget on April 19th. It is the first budget since the onset of the COVID-19 pandemic and the first since 2019. At this time, the government faced a two-pronged challenge in this pandemic time budget. Firstly, spurring the recovery with spending, and secondly, reining in runaway debt levels created by that spending, which we'll talk about a little bit further in the presentation. Next slide, please. So the national deficit in 2021, $354.2 billion. And as we'll look at some comparisons, a staggering number, mainly fueled by COVID relief support. In 21 and 22, it is projected to be or come down to $154.7 billion. The deficit in 2019 to 2020, as a matter of perspective, was $39.4 billion. And the previous largest deficit in Canadian history was $55 billion in 2009, a result of the 2008 financial crisis. No timeline was included for balancing the budget. Next slide, please. So as far as the national debt, the federal debt is $1,079 billion, obviously a staggering amount of money, and projected to increase into March of 2022 at $1,233.8 billion. That debt, as a percentage of GDP, currently is 49%, projected to be 51.2% in March of 2022. And again, the elevated national debt levels are mostly due to the COVID-19 spending. And just to put it in perspective on some of the government programs and that spending, the projected amounts pegged for the Canadian Emergency Wage Subsidy, otherwise known as CEWS, for the 2021 and 21-22 fiscal year combined is $110.6 billion. And for the Canadian Emergency Rent Subsidy, known as CIRS, it is $8.4 billion. Next slide, please. So economic outlook. Some of my partners did present, next slide, please, did present to other clients and friends of the firm. And we had a friend of the firm from the Canadian Chamber of Commerce, so Dr. Trevor Stratton, be part of those presentations. So I did incorporate some of his slides as far as an economic outlook, as I thought they'd be interesting for people to see some of these statistics. Next slide, please. So the change in debt to GDP, and that's basically not including the financial sector. Canada's debt to GDP ratio increased by nearly 80% over the year. Its substantial increase in household debt was somewhat unique, even when compared to other developed countries. And as you can see, Canada is by some measure leading the G7 countries and other countries in the world by a fair bit in relation to the GDP and that ratio. And you'll see household debt, and there'll be a little more about that in other slides. The household debt has always been high in Canada. The income to debt ratio has always been fairly high. And then you've got the 9 finance corporates, and then of course, with all the government spending that has been taking place because of COVID for the most part, you'll see that represents a large amount of that statistic. Whereas if you, in comparison, look at the very bottom, being Australia, was one of the few countries to see its household debt decline over the year. This was possibly due to an early access scheme that allowed millions of Australians to make withdrawals from their superannuations, which is a social security fund similar in concept to the Americans 401k. And presumably the Australians were availing themselves of those additional funds, and again, presumably paying some of their debt off. Next slide, please. So the federal deficit under spotlight, based on a liberal budget, projected deficits in 2021 at $354 billion. You'll see that the PBO, or the Parliamentary Budget Office, in May of 2020 had it at $260 billion. During the fiscal update, and remember, this has been the first budget in 2 years, so there were other fiscal updates in the interim, of June 2020 of $343 billion. And then the other update in November of 2020, $381 billion, which lands on the budgeted amount, brought down April 19th of $354 billion. Now, going out over the next 4 years, the projections are obviously coming down significantly, with the view and the hope that we're going to get through this horrible pandemic and get our fiscal house, so to speak, back to normality, or to normal levels. But as you see, 21-22, I should say, $154 billion projected deficit, 22-23, just under $60 billion. The next year, $51 billion, and then coming down considerably in 24 to 26 of $35 billion and $30 billion respectively. Next slide, please. So accumulation of excess household savings by country. So the Canadians are leading the G7 countries as a percentage of the 2019 nominal GDP, which is interesting given the dichotomy as far as their average household debt is concerned. So it appears Canadians are saving their money and perhaps availing themselves of the availability of debt and the low interest rates, and perhaps not paying it down as much as other countries. And my banking friends tell me, and this bears this out as well, that their deposit levels in the Schedule A banks have never been higher in history. Again, people aren't spending money on travel, food, eating out, other things. Having said that, try finding a Sea-Doo or a pleasure boat right now, because people are spending some money on those sort of things. Next slide, please. So growth forecasts, as we'll see, based on real GDP growth and average private sector forecasts. Obviously in 2020, when this pandemic hit, the GDP took a nosedive and went into the negatives of 5.5% based on both colors of the graph. And then encouragingly in 2021, we're seeing projections of it reversing itself to 4.8 to 5.8%, which is fantastic. And I think that will be due to a lot of pent-up demand and again, spending in the economy, et cetera, once we keep getting vaccinated and keep getting through this pandemic. And then as you'll see in the next 5 years, it's still a healthy amount at, roughly 3.5% on average between the two graphs, and then sort of stabilizing at around 2% going into 2025, with an overall average of between 20 and 25 of just under 2%. Next slide, please. And again, encouraging bars here in this graph with respect to the gradual recovery expected to resume as vaccinations proceed and consumer confidence grows and we open up and we're not exposed to lockdowns and all of the things that we've been exposed to during the pandemic. And you'll see how that bears out in 2020 with the March lockdowns and the various bar graphs representing consumption, residential investment, business, fixed investment, government, exports, imports, and GDP. So all trending in the next 3 years into 2023 in a healthy manner. You'll see how, with respect to residential investment, I know we've all seen the market in real estate and how crazy it's become and the spike that has happened in 2020 and 2021. They're projecting that to level off, not really decline, but level off going into 2023. So again, those are all encouraging indicators that hopefully we're on the rebound from the 2020 pandemic and those numbers and those dips in the graphs in that year. Next slide, please. So I thought, some interesting statistics, some good projections, I think, optimistic projections, and hopefully realistic projections, so we can all get back on track here. And I thank our friend at the Canadian Chamber of Commerce for those. Next slide, please. So getting into the budget and what was brought down on a personal tax and business tax proposal areas. So thankfully, no changes to the capital gains rates, which are, by the way, personally 26.75% and corporately 25.8%, and no changes to principal residence exemption. Now, there were some speculations that the government may tinker with the capital gains tax, but we are potentially in an election year. So I'm wondering if they're holding their powder on that, and certainly on the principal residence exemption, I think any government that might want to mess with that may not want to be in government much longer. So not sure they're going to look at that anytime soon, but again, remains to be seen if they do tinker with the capital gains rates to frankly pay for the large deficits incurred with the pandemic spending. They did introduce a new tax, being the luxury goods tax, effective January 1st, 2022. So everybody wants to go out and buy their yachts and airplanes before January 1st. And basically the thresholds for those things are luxury vehicles and aircrafts over $100,000. Purchases of those will be taxed, as will be boats over $250,000. And that tax rate, or the rate of tax, will be the lesser of 20% of the value above the threshold. So again, $100,000 for cars and aircrafts and $250,000 for boats, or 10% of the full value of the car, aircraft, or boat. Other personal tax measures brought down in the budget with respect to pensioners. So increase in the old age security, or the OAS, for Canadians over 75 by introducing a one-time $500 payment, and a 10% increase to regular ongoing OAS payments. Individuals, an increase in the Canadian worker benefits from 26% to 27%. Increase in the eligibility thresholds. And just to give you an idea, so for example, from what it was and to what it's been provided for in the new budget, a single person with no dependents, the eligibility threshold went from $13,194 to $23,944. Families went up from $17,522 to $26,177. So the government has certainly made an effort to increase, obviously, the availability and eligibility of those benefits by increasing those eligibility thresholds. Another measure brought down was an option to claim a deduction for the repayment of any federal COVID-19 benefits in the year of receipt rather than the year of repayment. So the thought that a lot of folks out there, given what we're going through, could certainly use a larger tax refund this year as opposed to in latter years or the years they repay any of those benefits. It also allows, it is providing for improved access to disability tax credits. And as far as the disability tax credit, the eligibility is you must have a certificate confirming a severe and prolonged impairment in mental or physical function. And the budget basically updated the list on mental functions assessments for disability tax credits and improve access to benefits, and also recognizing more activities in determining time spent on life-sustaining therapy and reducing the minimum required frequency of therapy to qualify for the disability tax credit. So they're going to help those folks considerably. Next slide, please. Also, for students and apprentices, the budget provided for extension of interest-free period for Canadian student and apprenticeship loans to March 31st, 2023. Next slide. So as far as corporate tax measures, they brought in an immediate expensing of depreciable property. So for assets that are eligible for, that have been bought or acquired for after the budget, for the time period after the budget and before January 1st, 2024. So what that entails is a $1.5 million annual cap, and you must use it in the year that year or you'll lose the 1.5. So obviously, if you can use the whole 1.5 million, and that 1.5 million in any fiscal year is shared amongst associate groups and or related companies. It does exclude long-lived assets such as building structures, goodwill, parking lots, etc. Also, it brought in a tax reduction or a reduction in the rate of taxes for zero emission technology manufacturers, going from 15% to 7.5% for general corporate tax rates, and from 9% to 4.5% for small business rates. So that essentially allows for accelerated tax deductions to support clean air technology. Next slide, please. Further to that point, the capital cost allowances on clean energy equipment have been expanded. So they have expanded any classes or clean air or clean energy equipment, I should say, for property acquired and available for use after April 18th, 2021. And conversely, they are removing or restricting eligibility on fossil fuel equipment after 2024. And there are various categories and eligibilities of various classes of equipment, which you can speak to your tax account on, et cetera. But certainly, it's all about clean energy and looking after the environment. So they also talk about in the budget avoidance transactions. So Canadian tax law has an anti-avoidance rule designed to prevent taxpayers from avoiding their tax liabilities by transferring assets to non-arm's length persons for insufficient consideration. To address tax planning designed to avoid these rules, the budget proposes a number of measures that will apply to transfers undertaken on or after the budget date, April 19th, 2021. This is a complex area of Canadian tax law, and if anybody is looking at any such transfers, again, I would suggest you get specialized tax advice with respect to that, and be cognizant of the new rules that have been brought down in this current budget. Next slide, please. So going to the various COVID-19 relief programs offered by the budget or by the government, and somewhat changed, enhanced, restricted, reduced, ratcheted down in the budget. We start with the Canadian Emergency Wage Subsidy, or CEWS. So the budget proposes to extend the CEWS benefit or subsidy until September 25th, 2021. And with all of the subsidy or programs going to speak about, the government has a view of, and you'll see ratcheting down the benefit amounts, again, with a view that the economy will be growing, prospering more so than it has been, certainly, and that we're working our way through this pandemic and getting back to somewhat of a normal economic environment. So starting July 4th, 2021, the decline in revenue must be greater than 10%. And then the rates will gradually reduce or phase out starting on July 4th, dropping to a maximum subsidy rate of 20% from its original 75%. And you'll see that for the periods 18 to 20, you'll see a 60% reduction, July 4th to July 31st, 40%, August 1st to August 28th, and then down to 20% August 29th to September 25th, 2021. Curiously enough, I think we all heard about, when this certainly came out, when the pandemic struck, about larger corporations, et cetera, availing themselves of the CEWS while their executives were taking home $1 million bonuses and being paid 7 figures, et cetera. So the budget provides a proposal to require a publicly listed corporation to pay wage subsidy amounts for a qualifying period that begins after June 5th, 2021. This triggers if corporate aggregate compensation for specific executives during the 2021 calendar year exceeds his aggregate compensation for specific executives during the 2019 calendar year. So they've basically scaled it back or used the measure going back to 2019, which obviously was pre-COVID, and one would argue would be, normalized compensation year as opposed to 2020 during COVID. So repayment amounts would be equal to the lesser of the total of all wage subsidy amounts received in respect of active employees for qualifying periods that began after June 5th, 2021, and the amount by which the corporate aggregate specified executive compensation for 2021 exceeds aggregate executive compensation for 2019. This requirement to repay would be applied at the group level and would be applied for wages subsidy amounts paid to any entity in the group or / related company. Next slide, please. The next one deals with the Canadian Emergency Rent Subsidy, or CERS. And again, the proposed extension of this subsidy is September 25th, 2021. And again, starting July 4th, 2021, the decline in revenue and entity experiences must be greater than 10%. And the rates gradually, again, are getting phased out, ratcheted down starting on July 4th, dropping to a maximum base subsidy of 20% from its original 65%. The lockdown support rate will be maintained at 25%. So what that is if you're a qualifying rental property and you are subject to a lockdown by a public health restriction, you are eligible to claim an additional 25% subsidy. And then, much like the CEWS, the ratcheting down in the next 3 periods go 60%, 40%, and then landing at 20% as of September or August 29th to September 25th, 2021. Next slide, please. Now, this is a new subsidy the government came down with in the budget called the Canadian Recovery Hiring Program, or hiring subsidy. And the budget proposes to introduce the new Canada Recovery Hiring Program, CRHP, which will provide eligible employees with a subsidy of up to 50% of their incremental remuneration paid to eligible employees between June 6, 2021 and November 20th, 2021. This new program is intended to offset a portion of the extra costs that employees take on as they reopen, either by increasing wages, hours worked, or by hiring more staff. Eligible employers, again, must have experienced a 10% decline in revenue to qualify and must be a for-profit CPC, Canadian controlled private corporation. Other eligible entities for the hiring subsidy include proprietorships, nonprofits, registered charities, and partnerships. So there's a little diagram on eligible employees, eligible employer, the remuneration, and qualified revenues, which we've covered and we'll cover in the next slide. So the incremental remuneration calculation for the hiring subsidy is employers' total eligible remuneration paid to eligible employees for the qualifying period, less the total eligible remuneration paid to eligible employers for the baseline period, which is March 14th to April 10th, 2021. And the eligible remuneration for each eligible employee is subject to a maximum of $1,129 per week. So the next slide will show how that works. So you'll see there the various periods from 17 to 22, the qualifying period dates, and then it's so whatever the incremental increase in wages, et cetera, due to new hirings, et cetera, are compared to the March 14th to April 10th baseline amounts. And then anything over and above that, a subsidy could be obtained for as you'll see, the sliding scales of 50% for the first 3 periods, and then 40, 30, and 20% into the last period. Again, much needed to, I think, improve or to provide stimulus for employers, hopefully coming out of the pandemic, their business, coming back to normal and requiring more investment in people and wages, obviously, and compensation. So next slide, please. Other new recovery benefits. Some of these were introduced pre-budget and end of March, but have been were addressed in the budget and were altered somewhat. So as far as the government proposed to provide an additional 12 weeks of the Canadian recovery benefit to a maximum of 50 weeks. And the first 4 weeks of the additional 12 weeks will be paid at $500 per week. The last 8 weeks will be paid at $300 per week. Caregiver benefits also extended by additional 4 weeks to a maximum of 42 weeks at $500 a week. And the Canadian Recovery Sickness Benefit is providing $500 per week for up to 2 weeks. There is some discussion they may be extending that to 4 weeks for eligible workers unable to work due to contracting COVID-19. Now, there are a myriad of eligibility requirements for all of these benefits, such as you have to be a Canadian citizen, you have to be over 15 years of age, and a common eligibility requirement are that the individual earned at least $5,000 in 19 or 20 or in the 12 months before the date of the application. Other such eligibilities, for example, for the caregiver's benefit are that you're working 50% of your regular work hours to care for a child or a loved one who needs requisite care. And all of these benefits are taxable and must be declared on your tax returns. So that basically covers what I wanted to cover today. And I am happy to answer any questions that anybody might have.
And I just wanted to note that Zoom has had technical errors. We weren't able to stream to Facebook Live, but we will have the recording up this afternoon.
Okay, terrific.
So those amongst you on the participants board, do you have any questions? Type them into the chat, and then I'm monitoring the chat here on my screen, and then we'll relay them to Chris, and I can both see them at that point. So.
So I don't see anything yet, but Chris, maybe I'll ask a question. I mean, thinking of it from the UCC's perspective, we deal with a lot of non-profit organizations, community organizations. What are the most common types of questions that you get asked by them? I mean, they may not have necessarily the employees. They're looking potentially at rent. What kind of advice would you have for the nonprofit sector specifically related to the business advice that you've got? What is maybe the common kind of issues they should be looking for?
Well, I think I wouldn't suggest there's a lot of differentiation. They're running a business much like for-profit corporations, et cetera, and their business challenges and issues are the same, I think, for the most part. I think what I would suggest is just certainly take a look at all of these government programs and try and take advantage and avail yourselves of whatever benefits you can. given these uncertain times, because certainly I'm sure a lot of them are experiencing declines in donations, et cetera. There, serious revenue challenges going on. And all of these things will apply for the not-for-profits as well. So I would urge them to look at all these programs.
Definitely, yes. We've seen that happen this year, actually, with the government starting to treat nonprofits similar to the small businesses. And maybe I can just get a quick plug in for our UCC weekly COVID bulletin. So we tend to put a lot of the information of the programs you've mentioned, Chris. We try to put direct links for people on a weekly basis so that they can get direct access to see what they're eligible for. And that's the most important piece of it.
And how are you finding them, Ihor, as far as how they're faring in their applications and the granting of these subsidies, et cetera?
There's a lot of programs coming out, so it's just sort of, I would think, wading through the programs and wading through the eligibility has definitely been something we've been talking to our community groups about. Depending on, do they rent facilities, do they own facilities, the different kinds of financial obligations they have to staff or to different kinds of funds. I think, there's definitely, we've been working with the federal government on kind of eligibility, because again, for example, in the arts sector, you have to be a professional artist versus a community artist may not be eligible. So there's you have to read the fine print within each of the programs. But I mean, generally, we did a bit of a COVID survey about 2 months ago, end of January, early February. Our feedback from the community was that people are individually and as organizations getting access to programs. They're aware of them. And I know that members of parliament offices have been very helpful in sort of just giving people links to all the different kinds of programs that might be available, even provincially as well, that sort of interconnect with this federal grid.
Right, perfect. Good.
Oh, okay, I'll go turn it over to Alex. We do have a question.
Do have a question. With Canadian immigration levels so low in 2020, do you think there'll be expanded hiring incentives to hire recent immigrants? And that's from Kasyan Saltikevich.
I don't know the answer to that. Certainly, I think the government's view is to try and stimulate economy as best they can and get us through this horrible pandemic. So I haven't heard much about that, but I would expect that you may see other hiring incentives. I mean, as you know, the borders are closed for all intents and purposes. And actually, my partner is a senior director of immigration, works very closely with the Minister of Immigration, and she's also Ukrainian. I met her at the cottage, and it's been fabulous. Changed my life. In any event, I think you'll see that, but I have not really heard or seen a lot around that as of yet.
I have a question for Chris, just on a general business trend in terms of seeing what you see in your insolvency practice. What are the sort of trends and issues that corporations are seeing right now, sort of not maybe the giant ones, but sort of small and mid-sized businesses, and how they're dealing with the situation, where COVID is still out there and they're still subject to shutdowns and stay-at-home orders? Right.
So interestingly enough, Alex, everybody is revenue challenged, of course. The banks are being very, very patient with all of these small to medium-sized borrowers. My business, essentially in the realm of what I do, is very quiet for now. Now we expect that to change, unfortunately, but it is very quiet. I see a lot of these businesses are availing themselves of the subsidies. And some will argue, is this creating kind of a false economy? And is it a prolonging of the inevitable? Well, I think to some degree that will be the case. But certainly that's the revenue side, but on the expense side, they're also being reduced considerably because they just aren't operating in the normal course of their business. So I think there will be significant fallout, unfortunately, but it just hasn't materialized yet. I think that can be, greatly attributed to the subsidy programs, which are needed and necessary, and some businesses will be able to survive. I think a lot of businesses will be able to survive given what they've been able to garner in that respect. But I think there will be a fair amount of negative shakeout, if you will, coming probably. And again, depending on when the government does, as you saw, a lot of these programs are ending September 25th, and I think the government's taking sort of a wait and see approach to see how this all this turns, the stimulus, the economy, COVID, lockdowns at all, future. So it remains to be seen if the government will extend them or not, and I think that will have a large factor on what I'm talking about. So.
And in terms of sectoral winners and losers, who are the winners in this? Like, what sectors do you think are going to thrive after coming out of this economy? And this is probably more in the sort of small to mid-sized business kind of environment.
Well, certainly the car dealerships and leisure craft dealerships are all doing well. Some manufacturing is doing well. Healthcare is doing well. Obviously, retail, restaurants, that sort of thing, not doing so well. I think there was a stat that 10,000 restaurants, maybe that was the U.S., have closed their doors in the last year. That's a staggering amount, but that's really what we're seeing right now. I mean, I've got a marina that I'm dealing with that hasn't been doing so well, interestingly enough, but it's kind of all over the map in that regard.
Alex, there's in the chat, we have a question from the UCPBA Ottawa.
I don't have it in the chat, so you might as well read it.
Oh, okay. So the email that's come in from our friends at UCPBA Ottawa is for Chris. Do you think governments will push more domestic firms to grow and trade less internationally in the short term? Also commenting on interest rates, they're at record lows. What are your thoughts on corporate borrowing levels, and particularly for the hospitality industry or other service industries?
Sorry, could you just repeat that one more time for me, Ihor?
Sure. The first part was about, do you think governments will push firms to grow and trade more domestically rather than internationally? And the second question was on interest rates being so low. What are your comments on corporate borrowing levels for hard-hit industries, particularly hospitality or service industries? Are they too high? Are they worrisome or not so much?
Okay, well, I'm not sure the government's going to, for lack of a better word, interfere on or dictate where a certain business or sector has to trade and get its business from. I think that could be very debilitating if the majority of the business is outside of Canada. So I don't see that coming. I think that would be, in my opinion, very intrusive for them to do that. I think obviously they want businesses to thrive and get back to normalized levels, but again, I think it'd be a very slippery slope to try and dictate where you trade, whether it be domestically or internationally, because every sector is different in that regard. As far as borrowings, we saw the levels of personal debt. They've never been higher. The availability of credit has never been more easy to obtain. We see mortgage rates are at incredible low levels, all good things. I think, again, I know this person asked about the corporate side, but just generally, we see the housing markets are booming. We see first-time home buyers and other perhaps younger couples, folks buying homes a little bit beyond their means. And God forbid if the mortgage rates went up a point or two, I think we'd see just a horrible result in that respect as far as people being able to afford these rather large mortgages going forward. So I think for that reason, generally, I think the Bank of Canada and the Fed in the US are managing those interest rates very carefully. I think they're going to stay low. They just have to do that, in my opinion, to avoid sort of putting a stall to the recovery. And so I don't see those changing a whole lot. I think they're going to manage them very closely, and they've been doing that for several years. Gone are the days where we're going to see at least in my lifetime, a 22% interest rate for a mortgage. Which Ihor, you're probably too young to remember that, but that Alex, you remember that. So staggering. As far as the borrowings corporately, the hospitality, the banks look at every sector. They have their analysts, they have their graphs and their analyses, and they're going to look at them based on their merits. In my opinion, they're credit lenders. They're lending to various sectors, and it's going to be based on the merits of that particular sector or that business. And if it warrants corporate borrowings, they'll extend them. I mean, they are wanting to lend more money. They've never been sitting on more money, as I said earlier, in Canadian banking history. So they are definitely open for business, but they are also in the business of risk, and they measure that, and they will lend where it makes sense from a business standpoint. So.
We have some more candidates,
I don't see anything else coming in through the chat.
I have nothing on the chat, so I'll ask Chris a question.
Go ahead. Yeah.
In terms of sort of the mid-market and small business sector, if you could people are sort of living off of a lot of this COVID relief type stuff, but there's probably underlying issues as well. So what are sort of the warning signs that would, be a thing that would warn a business person or business owner to go and seek relief or seek assistance from some restructuring professionals in terms of the kinds of things that may be structural or issues with the business itself?
Sure. Well, and thank you, Alex, for that. What I see a lot of the times is, cash flow is king, cash is king. So if you're having cash flow issues, and often we'll see businesses sort of relying on, not remitting its source deductions or its HST on a timely basis because they need the cash that would normally be remitted for ongoing cash flow needs and business operations. Certainly, if a company is experiencing that, then that's a huge warning sign that you need to speak to somebody. And I should note that the directors of those corporations that are experiencing those sort of issues, and again, I see it all the time. It's just what happens sometimes because some things you have to do to survive. But the directors of those corporations and the guiding minds, please note, do have personal directors liability for those things, and those are things what are called deemed trusts. So you're deemed to hold those monies in trust when you deduct from an employee's paycheck or you collect HST. You're deemed to hold those in trust, and then you must remit those to the government in the requisite remitting period. So that's a big red flag. Certainly, if you're seeing a lot of wolves at the door, so to speak, on your accounts payable, you're just not meeting them generally in the timing and the terms that you're supposed to be meeting them. And they're getting larger and they're increasing. You've got wolves at the door. You're placed by some of your suppliers on COD, or God forbid, somebody has commenced litigation against you. That's certainly where an individual like myself can jump in and help you with managing your creditors and managing, frankly, your lender. I mean, I have great relationships with all of the special loans units of all the Schedule A banks and B banks and credit unions, et cetera. And we know what they're looking for. We know what they need from an entity that may be experiencing some challenges. I mean, their goal is to get you, if you are put into special loans because you're facing some business challenges and you're offside on your covenants, or you've missed a few payments to the bank, et cetera. They want to help. They want to engage professionals like me to help the company in that situation and get them back into a normal business banking relationship. That's everybody's goal here, not to end up in an insolvency of a company. And as I mentioned earlier, the banks are certainly exhibiting much more patience than probably in normal times. And every bank's different, every industry and sector is different. But unless there's a massive deterioration in the bank's position, they will, endeavor to work with you to try and solve the problems. And often they'll engage someone like myself to assist in that regard.
So in terms of careful for what you wish for with all this COVID relief, what is the CRA going to do about some of this stuff is loans, some of this stuff is there's tax issue. What do you think the CRA is going to do in terms of how this various COVID relief is taxed? Because you took it because you were desperate for the cash to get it, but there may be a reckoning at some point.
Well, yeah, and I think that's right, Alex. I mean, I'm seeing friends, children, et cetera, just starting out in their careers, who may have gotten the old CIRP, as they were called, and fully taxable, no deductions, they're now facing a tax liability for the first time in their life, owing on their tax as opposed to getting a tax refund. So CRA, they're giving to date no quarter on that. They warned people about this when they were handing this money out back in 2020, et cetera. So there's really, it's status quo as far as those tax amounts owing as a result of those benefits being paid are concerned. And again, and with corporately, really no quarter. I mean, they're requiring their source deductions, their HST payments based on pre-COVID schedules. They're exhibiting a little less enforcement activities, such as if you owe for source deductions or HST, they can issue what's called the third-party garnishment on your receivables, which can be catastrophic, and it essentially would cripple a corporation's cash flow. So they're not doing that as much, and they're showing some patience that way. But as far as reporting and remitting requirements, deadlines, there's been no change in that. And I'm not aware of anything coming, Alex. I mean, I would suggest if it hasn't come to date, it's not coming. So.
Okay, Ihor, do we have further questions?
No, I think we've gone through all the questions that have been submitted.
Okay, Chris, do you have any other things you want to add to this?
Other than, again, I appreciate everybody's time today, and if any other questions come up, you have in my bio, there's my phone number and my email address. Please don't hesitate to reach out. And if anybody, or if they have a relative or anybody unfortunately experiencing financial difficulties on a corporate or personal level, that's really my specialty, and happy to offer advice on a confidential basis and try and help out in any way I can. So.
Now, Ihor, I think we're going to be posting this to our COVID-19 webpage. And I think that would also, the recording, plus I think we're also posting Chris's PowerPoint and also onto Facebook. So maybe what are the coordinates of that?
So yeah, ucc.ca, www is our main webpage. In the top right-hand corner, you'll see a little COVID-19 resource page. We do a weekly bulletin for our email subscribers, and as well, we're on Twitter, Facebook, Instagram, and LinkedIn. So if you're watching this in the future, you're probably watching from one of those sources. So, and Chris, thank you for your presentation. We'll share the recording and the presentation as part of that for people to review in their own time this week.
Perfect, my pleasure, and thanks for having me again.
And I think that's it then. I think thanks to the UCPBA Toronto for the initiative for starting this seminar, and thanks for UCPBF nationally to publicize this to their individual branches across the country. And that will be the end of this. Stay tuned for other topics in this series for other types of COVID relief. So thank you very much, and enjoy the rest of your day.
Thank you. Be well, everybody.